Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to talk about my third stock pick of the month of December 2020. And you wouldn't guess this stock at all. You wouldn't guess at all, but I'll tell you after we dive right into it. But if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. And so we'll just get right into it, guys, and see how we did for the day here. Today, market value of the portfolio is $1,760.22. We are up $5.28. That is 0.3% for the day. For the week, we are up 29 cents, up 0.02%. For the month, we are up $95.63, up 5.74%. For 3 months, we are up $240.59, up 15.83%. And for the past year, we are up $240.22, up 15.8%. And that'll be for all as well. So we'll just go through it here, through the whole portfolio. But before we do that, it is Tuesday. So I just wanted to show you guys some proof that we did put $100 in today, and it'll be in Friday to make this move on this new position that you wouldn't believe that I'm choosing. And so the stocks that I have are BCE, so Bell Media Company, or BCE Corporation. They did change their name. 2 shares sitting at $111.32. Today's return is $1.72. I am down $4.78 since owning this position, which was last week. But today it closed at $55.66, down 86 cents, down 1.52%. So we own 2 shares of that. It's about 6.35% of the portfolio. The next stock that we're talking about is BMO. BMO closed out at $97.46, up $1.34, up 1.39%. We own 5 shares. Total value of $487.30. It holds about 27.78% of the portfolio. Our average cost was $81.32, up $6.70 today. Total return since owning this position is $80.70, up 19.85%, and that is Bank of Montreal. Next stock, we own 7 shares of Bank of Nova Scotia, down 4 cents per share, down 0.06% for the day, closing out at $68.12. We own 7 shares. Total value of $476.84. Total portfolio percentage is 27.18%. Our average price of buying is $54.58. Today's return, we were down 28 cents. But total return since owning the position is $94.79, up 24.81%. I believe that is a very strong buy for me, a very good buy. For the day here, we have Loblaws 65.14 closing out at the end of the day, down 6 cents, down 0.09%. We own 3 shares of Loblaws. Total value of $195.42. Portfolio percentage is 11.14 of the total portfolio. Our average price was $64.02. Today we're down 18 cents. Total return since owning the position is $3.35, up 1.74%. Next stock position that we own is Manulife Financial Corporation, closing out at a whopping $22.44, up 4 cents, up 0.18%. We own 17 shares of Manulife. Total value is $381.48. Our average price came in at $19.26, and it holds 21.75% of this portfolio. Today's return is 68 cents, but our total return since owning the position is $54.04, up 16.5%. Next position we own is TELUS Corporation, telecommunications company, closing in out at $25.49. We gained 2 cents per share today, at a whopping 0.08% up. We own 4 shares, total value of $101.96. Our average cost was $25.36, and it's about 5.81% of this portfolio. Today's return is 8 cents, and total return since owning this position from last week? Yeah, last week is 52 cents. Okay, so the stock that is coming in, that is going to be added to the great portfolio, or the Narong index, or the Buckning Index, whatever you want to call it. Just this dividend portfolio, not an index. I'm just kidding about that. But for this portfolio is a company that is very well known, and they are the second largest bank. Yes, it is a bank, so you wouldn't have guessed it. I have a lot of bank stocks, as you can tell. BMO, Bank of Nova Scotia. I think that's it. Yeah, I love bank stocks though. So this stock coming in at is TD, Toronto Dominion Bank, closing out today at $71.92. Very climatic, up 23 cents, up 0.32%. The market cap is not the largest market cap actually in the top 5. It's actually number 2 in market capitalization at $130 billion. And the yield is 4.34%. This stock is a very good stock, and I'm very excited about this position. To tell you a bit about TD, ticker symbol is TD.TO, and I did give you the yield. Yep. So we'll just leave it on this one. This is the stock we're picking for the last 2 weeks of December. We're going to end the year off with TD, Toronto Dominion Bank. And to tell you about TD, so they did release their Q4, so quarter 4. Their fiscal year, I do believe, has ended. And so I do believe from 2019 to 2020, even though so much has happened throughout 2020, it has been such a crazy year, their revenues, I do believe, were up about 3%. Even though we had everything that happened this year, 3%. So I just want to take that into factor that this company is a very, very strong company. It's not just based in Canada. It's actually expanded quite a bit into the U.S. I think it's the southeast area. I think a lot of it is down there. But TD is a massive company. They're number 1 in Canada for having the most assets, dollar figure wise. I do believe they're ranked number 4 in North America for having the amount of assets they have, and we'll talk about that too. There's a lot of things I think a lot of people don't talk about TD. I'm not going to go into their financials or anything like that. And the reason I'm not going to do that is because I think there's a lot to this company that people miss out on, instead, and well, maybe not miss out, but maybe not know, but know that it's a good investment, or increasing this position with TD and continually owning their stock. And some people can't explain the reasons why, but I'm going to tell you exactly the reasons why I'm going to be investing in TD, why I'll continue to increase my position in TD regardless of the price. So TD has paid a continuous dividend for 164 years, because we are building a dividend portfolio. Sorry, my eyebrow's just so itchy. Oh yeah, there we go. 164 years of dividend payments, year after year after year, and since 1995 to 2020, they've had an annualized dividend growth of 11%. So in 1995, I think their dividend was 22 cents. Today, it is $3.11 per year. So year over year, that's 11% annualized growth rate. So 164 years consecutive, continuous dividend payments. Dividend yield, I think, was what's today? Closed out at 4.34%. I've been watching the stock all year, and you've seen it go down. You've seen it come back up. And anybody who bought during that dip, great job, fantastic. Yeah, this is a great company to definitely invest in. But what I'm going to talk about is actually their U.S. side, because this is a massive thing in my opinion. And I think we need to look at whether this bank can grow, because the thing that is with Canadian banks is that but Canadian banks are so heavily regulated. It's very hard for them to expand, but TD does such a fantastic job of doing that and achieving these things that may not seem important to investors, but are actually very important to a lot of investors if you know where to look. And so TD is the only Canadian bank within this index, and it's called the Dow Jones Sustainability Index, and that's a global index that takes environments, just sustainability in the environment, things like that very seriously. And out of the 27 banks that are included in that index, TD is the only Canadian bank that is in there. Okay, so that's very, very important for a lot of people, maybe for a lot of new investors that are coming onto the scene. This new generation of investors do take into factor, economically, carbon footprints and things like that. Like, how important is that? Like, you look at, for example, Tesla, very economical. It is a huge thing. You see Apple going in that direction as well. A massive $2 trillion valuation company talking about reducing their carbon footprint. And that sometimes gets certain investors excited. And so that is a very, very big achievement, especially for a Canadian bank. And so that's one of the reasons. Second reason is this company actually is the largest shareholder in another company in the US, a very common known name in the US, and that is Charles Schwab. TD is the largest shareholder in Charles Schwab. They had was it a transaction between TD Ameritrade and Schwab in November of 2019. And they just recently, it was in October, that TD became the largest shareholder of Charles Schwab. And that's a US company, and that's how they kind of expand, right? And so TD has been building this US expansion for a very long time, and it just continues to be that way. And when expansion happens, that means growth happens, and especially growth in the US. I know a lot of companies are starting, well, not a lot of companies, a lot of Canadian banks are trying to get into the US. For example, CIBC last year, CIBC is another top 5 bank that I own shares in, but just not in this portfolio. They started expanding into the US, I believe it was a year and a half ago, where you can have checking accounts there, mostly in the Chicago area. They bought out a private wealth company to start building that US portfolio for them. And so TD is doing an awesome job of that, and not going after, but owning that amount of shares, or being the largest shareholder in Charles Schwab, seems like a tongue twister to me, is a fantastic thing. It gives them that ability to grow, and they have partnerships with credit cards in the US, like Target was a big one. I know Target tried to come up in Canada, but did not work at all, and that kind of shut down right away. I think it lasted like a year and a half. And then they have also partnered with a company called Nordstrom, and Nordstrom is a massive company, mostly in the retail space, but they have had partnerships with them with credit cards as well. And so just that gives you an idea of what TD is doing. They're moving forward, they're continually growing, and I'm very excited about that. The numbers wise, to be 3% up in revenues after this year is absolutely crazy. I know they were down at least 20% in net revenues, but they are still up 3% in just year over year. Like, they beat last year's record by 3%. That's mind blowing, I think, in my opinion. And so that is why I'm going with TD. I'm not going to go into their financials because I don't need to. I think that says enough about the company. But if you do want to go into their financials, it is on their website. They do have an investors relation website that shows you their financials, and you can go through that and learn about it. But that is the reason why I'm picking TD, is because of the dividend itself, the expansion that is happening, having ranked number one in Canada for the most amount of assets, being number 2 in market capitalization, and also being number 4 in North America, as one of the, I think it's number 4 in the most assets in North America. So they do very, very well in a lot of things. And this year, I guess most of that revenue came from their wholesale banking side, not their Canadian retail or US retail. It came from just wholesale banking in general. That's really what carried them through 2020, which is fantastic. But they are just doing an awesome job, and I would never pass on this company regardless of the price. And so, yeah, sorry, they're ranked number 5 in North America. I just went back through my notes here, and number 1 in total assets in Canada. And so to be number one and be number 5 in North America in general for total amount of assets is a big achievement, and that just means growth, and that just means an aggressive kind of growth, because they're competing with not just their country of Canada, they're competing with North America, and there's a lot of banks in North America. And so hopefully you guys did enjoy the video. Please understand that I am not a financial advisor. I'm definitely not your financial advisor. This is all my opinion, and so please do your own due diligence, do your research, and you don't have to do what I say. This is honestly just my opinion. So hopefully you guys did enjoy the video, and we'll definitely see you in the next one. Bye.